2022 has been a challenging year for investors thus far due to rapidly rising inflation and significant market volatility. The S&P 500 index, which contains some of the biggest names on Wall Street, including Apple, Amazon, and Coca-Cola, is on pace to have its worst first half of the year since 1970. The economic effects of COVID-19 lockdowns, Russia's conflict in Ukraine, and Federal Reserve interest rate increases have contributed to the slowdown. Many investors preparing for retirement may be unsure what to do in such a volatile market. Warren Buffett has stated that the solution is straightforward. Try not to worry about it too much. Buffett, who is 91 years old, has experienced his fair share of market downturns, and as a result, he has gained some priceless knowledge about the markets and where to invest your money. Buy American, I Am, a wonderfully motivational essay from Buffett, was published in the New York Times in October 2008. His insights on the actions of a master investor during the Great Recession's approximate low point were revealed in the essay. They may still be helpful as we navigate another tumultuous period for the economy and the markets. Buffett begins his essay by stating one of his most well-known remarks describing his purchasing approach. A simple rule dictates my buying: be fearful when others are greedy, and be greedy when others are fearful. What distinguishes the market winners from the losers in large part is this capacity to act rationally in the face of market panic. Buffett is more aware of this than others. For the first time, new investors are probably experiencing actual market panic due to the current market upheaval. In contrast to the March 2020 flash crash and the subsequent swift recovery, the market today has experienced consistent negative sentiment. In reality, the Chicago Board Options Exchange Volatility Index has closed above 30 on 30 days during the past 6 months. The VIX creates a 30-day forward projection of volatility and is frequently used as a gauge of general emotion. The last time that occurred was during the Great Recession, the disaster Buffett wrote about in his article in the New York Times, with the exception of 2020. It goes without saying that fear currently has a stronghold on the stock market. Buffett continues by stating that stocks frequently begin to climb long before the economy improves. In the early 1980s, the time to buy stocks was when inflation raged and the economy was in the tank. In short, bad news is an investor's best friend. It lets you buy a slice of America's future at a markdown price. The Consumer Price Index figures from the 1980s showed this to be the case. The S&P 500 increased by 30% in 1980, while the CPI reached a peak of around 15%. Although Buffett emphasized that he does not attempt to time the market during collapses, the discounts provided to investors during difficult economic times are typically excellent long-term investments. As a result, the bad news is frequently a late indication of stock market performance. Economic downturns are a fantastic entry point into solid companies, so long as investors are comfortable with equities continuing to decline in the short run. So what is Buffett doing in this most recent lousy market then? The quick response shouldn't come as a surprise. He has been buying. Buffett's Berkshire Hathaway Incorporated has completed several noteworthy acquisitions, including the following: the $4 billion purchase of 121 million shares of HP Incorporated, the acquisition of insurance company Allegheny, big wagers on oil stocks like Occidental Petroleum and Chevron, the acquisition of 7 million Apple shares. Buffett is only one of many experts who advise investing in index funds, which are automatically diversified and own all of the stocks in an index. For instance, renowned American businesses like Apple and Amazon are included in the S&P 500 index. Similar to Buffett, late-great investor Jack Bogle advocated a buy-and-hold approach. He previously told CNBC that buying stocks and keeping them was the best method to invest, since your emotions will defeat you utterly if you try to sell your holdings to prevent losses and then get back in. It's difficult to predict what the near future will bring for equities, but it's clear that Buffett sees a lot of purchasing opportunities as prices decline in the market. In conclusion, unfavorable attitudes present a buying opportunity. One of the most challenging aspects of being an investor is finding high-quality companies to invest in when every headline portrays a picture of dread and gloom. However, Warren Buffett has demonstrated throughout the years that now is the ideal time to launch an offensive. And if recent purchases by Berkshire Hathaway are any indication, the market's long-term prospects are very promising. That concludes today's video. We hope Buffett's words have motivated you to re-enter the game with greater strength. We appreciate you watching all the way through, and we'll see you in the next one. Goodbye.